Now, Taiwan index holding on to gains of 0.1%. We have Hang Seng that's holding on to gains of almost 1% as well.
Doubts are there. Yeah. We'll sort it out.
I would say frontline, the Nifty, Bank Nifty, the indices are a little oversold here.
So it'll be positive for Ambuja Cements, both because they're simplifying it, and it'll be negative actually for Sanghi Industries.
Nifty 24,300, still trading about 15 odd points. Okay, back to the 20-day.
We expect government spending to resume for the later part of this financial year.
This is just simply change of nomenclature with a lot of conditions.
It's absolutely a pleasure to see the way investors have come into this IPO.
Yes, we are very optimistic about our growth in the future.
Half a percentage point gone now on the Nifty and the Sensex. The Nifty is down more than 100 points. Sensex down close to about 400 points.
I just don't want to get into the exact numbers yet, but essentially our growth plans remain pretty aggressive going forward.
We are hearing from sources that Karnataka government is likely to increase the duty on iron ore mining.
Here, another down day for the markets. It's a 124-point cut on the Nifty.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that's a day so far, and it has been once again a down day. Actually, it's a replica of what we saw yesterday. Everything is down, and mid-caps, broader markets is essentially 1/3%, about 0.5% cut. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi, good afternoon.
Hi, down for the third day in a row now. And today it's banks taking the biggest knock.
Well, that's right. The banking space has been a bit of a worry, right? And HDFC Bank as well has moved back to around the 1,800 rupee odd mark. But the one that's holding one end up, at least, is Reliance Industries. Prashant, as you said, it looks like a replica of yesterday. I don't know whether there's a twist in the tail, though. 60 minutes, we'll know whether or not the bulls want to fight back.
Well, let's hope they do, or maybe they can come back tomorrow as well after the Fed
for the clarity,
because that is the big one. Maybe who knows? I mean, after the Fed thing gets done and it's all in line, and they don't change too much about all the rate cut expectations for 25. Tomorrow's a new day. But 3 days now, I mean, the market's been gotten hammered on, and we are down to 24,178, which is a clean break below the 20-day. And if there's no recovery, I mean, you get a firm close under the 20-day moving average as well, and that's an important, at least for the near term, it kind of has acted as a bit of a sort of hurdle, or whatever you want to call it, change of direction, but near term. So keep that in mind. And also, this is the end of the year, so all those factors, it's never one thing, it's always a bunch of things. So that's what you have going. Up on your screen, I mean, actually, even the picture on your screen has not changed from when we looked at this at 10 o'clock. Reliance was pulling on the upside, and the banks were pulling on the downside, and it's up on your screen. ICICI Bank, HDFC Bank, between them adding about 80 index points pressure, and Reliance about 15 index points on the upside. So that's the long and short of it. Reema.
Well, metals are down for the fourth day in a row now. Metal index is down 1.6%. Banks, as we've been highlighting, the Nifty Bank down 1.5%. And autos too a bit on the back foot. The auto index is down close to about 0.6%. The Vahan data for the first half of, fortnight of December is a bit disappointing. Total registrations are down close to about 20%. And PSUs too are under pressure in trade. On the way up, though, pharma is holding up. Dr. Reddy's Cipla, Sun Pharma amongst the gainers. Trent has moved up right on top of the list. Trent is the top Nifty gainer, 2.5% higher. Reliance Industries is providing support, but the day belongs to the new listings. All three of them are off to a great start. MobiKwik, 85% higher. Vishal Mega Mart is up 41%, and Sai Life Sciences, 36% higher.
Okay, all right. Well, and they're from the broader markets, but if you pick and choose, still there are winners. KPR Mills is the stock that we had pointed out a couple of sessions ago. We're seeing big delivery-based buying, and you want to be with winners. So the stock went through 1 or 2 days of consolidation, and KPR Mills, yet again, it's up and about, up close to around 7% as we speak. So yes, the headline index is seeing some profit taking, but you pick and choose. There are a lot of stocks out there that are actually doing quite well. But let's get in Mitesh to help us out with what's the trade on the index. Hi, Mitesh. Good afternoon and good to see you win. Well, we've broken the recent low, which was at around 24,180. What's your view? Do you think we'll get second time lucky and we bounce off these levels, or do you believe the market's going to go back and retest lower levels?
Good afternoon, Ajay. So two things, one, since yesterday when I talked about index breaking 24,400, I think the next logical targets were 24,200, which has been broken, 24,200, 180 zone, and the other one is 23,950, 925 zone. So, the structure remains negative. We are oversold, but yet I think, there's a good chance that we'll head towards 23,950. I think pullbacks closer to about 24,350, 400 zone, I think, would be good selling opportunities. But till 24,400, 420 is captured on the upside, I think I'll maintain a negative stance. So in that sense, taking, we have some put option spreads on the Nifty, not trading via futures because with oversold levels, there could always be a chance of a pullback. Would want to short futures in case we get closer to about 24,350, 375 zones. But the view and the stance is negative, and targets would be now around 23,950, 925 to begin with.
Mitesh, any particular thoughts on Shriram Finance before we get to your stock picks? Now, Shriram has been under pressure for the last couple of days, but today it opened up in the green. So you thought that maybe there will be that rebound, but it's been sold into, and again, the stock is down close to about 2%.
Even the stock is corrected from 30 to 50 odd levels, and now it's getting very oversold, and there's good support around this 2860 zone. So maybe another 50 odd rupees down, but I think around those levels, I would expect the decline to be arrested, and the stock can give a good bounce.
What about your own recommendations for the last hour?
Yeah, so I have a sell on ICICI Bank. I think, that's a stock which has started correcting after hitting the earlier highs of 1350. Keep a stop at about 1320 now, sorry, 1322 now, and look for a target of around 1280 to about 1275 on the downside. And I'll go with the buy as well because the pharma pack looks very interesting to me. A lot of these pharma stocks have had a correction and now are trying to recover. Aravinda Pharma is something on the list, so buy here with a stop at about 1224 for targets of 13.
Okay, thank you very much for that. Let's talk about Viatech Vabag. Now, that is the big casualty in today's trade. The stock is down close to about 11.5%. Remember, we told you the company's, an order worth 2,700 crore rupees has been cancelled, and it's a sizable order. It amounts to about 18.5% of the company's order book. So that's put pressure on the stock, though it's recovered from the day's low. But Yash joins in with the details. Yash.
Well, Rima, as you rightly pointed out, the stock is under pressure. It was down 18% at one point of time. It's recovered some amount of those losses, down about 11.5% at this point of time. And that came on the back of what the company informed the exchanges just overnight. The company said that Saudi Water Authority has cancelled a 300 MLD mega sea water distillation plant order, which Viatech Vabag had informed the exchanges it won in September 2024. It's a sizable order, as you rightly pointed out, about 300 MLD worth 2,700 crore rupees. As far as what the company additionally informed the exchanges is that Saudi Water Authority has notified all tender participants on cancellation of the tender itself. It's important to note that it's not like, Saudi Water Authority transferred the order from one participant, one company to the other, but the tender itself has been cancelled. The company informed the tender stands cancelled pursuant to internal administrative procedures of Saudi Water Authority, and they are in touch with the company. Now, we reached out to Viatech Vabag, and there is certain amount of clarification which came from the management as well. They've said that the tender, that is about 2,700 crore rupees from Saudi Water Authority, cancelled because Saudi Water Authority wants to recalibrate the size as well as the scope of this order. They've also said that Saudi Water Authority will float a tender for the same order in its revised format in the next couple of weeks, and Viatech Vabag will participate and put its bid as far as this particular order again is concerned. Importantly, the management told CNBC-TV18 that they stick to their guidance of order booking of 3,500 crore rupees for the third quarter of FY25.
All right. Thanks very much, Yash, for that. So that is Viatech in focus. Stock did recover quite a bit. I mean, actually, it was down 14%. Recovered 7% from there, but then there's another round of selling which has come through and is down again. There's some flashes at the bottom of the screen, and this is maybe important. Free healthcare for citizens above 60 years of age in both government and private hospitals. That is what is coming through. Hospitals, of course, will get refunds by the state. So for the patients, what Mr. Kejriwal is saying is for the patients it's going to be free. For patients above 60 years of age, we'll provide free healthcare to senior citizens in all hospitals once elected. These are, of course, there's election due in Delhi, I think next year, and this is all coming ahead of that. You can call it competitive populism, whatever you want to call it, but those are some statements which are coming in. So more on that story as we kind of go along. But let's talk about NMDC, and I think this is the other one. So the Karnataka state government, and this is of course from sources, is looking to increase royalty rates that it charges on iron ore produced from the state. Sudarshan is joining in with details on this one. Stock actually was flattish when the news came. It's down 7%, so some real damage here. So over to you.
So NMDC is under pressure after, as reports suggest, that Karnataka government is looking to increase the duty on iron ore, and that announcement is expected very soon. In the next few days, we might see that government announcing that, because draft related to this has already been circulated few days ago. Remember why NMDC is in focus? Because of total mix, Karnataka forms nearly 30%. Another stock that can be in focus is JSW Steel. Also, if you remember the latest order of Supreme Court had already announced that the royalty that government charges from these companies, Supreme Court allowed government to charge them retrospectively, and that is from 2005. Now we are awaiting for the order of Karnataka government that is expected very soon, and that's the reason NMDC is under pressure, currently down almost 7%, and it might turn negative for 2024.
Okay, all right. Thanks a lot for that, Sudarshan. Well, it'll be interesting to see NMDC may challenge this particular order. So, ballpark number that I have is every 100 rupees of sales that they do in Karnataka, they pay roughly around 53 rupees as, taxation. That's what the government gains. Every 100 rupees of sales, 53 rupees the government gets. So that's why it's a big revenue spinner for them. And now they want to go ahead and squeeze it a little bit more and hike rates. So we'll have to see how much of that, particularly if it's retrospectively, then is it legally tenable? That's going to be important. Let's get in Prakash Diwan. Prakash, NMDC falling off a cliff today. I've got a couple of sales notes here, but we don't like to quote them because, it's still unofficial till we get the PDF. But some believe that maybe this reaction is exaggerated because there'll be a legal proceeding that will follow this. And they believe that the impact on the EBITDA may not be as much. Well, another part of the street says it's going to be a big damage. Which side of the fence are you?
Good afternoon, Nigel. So it does seem like a bit precipitous in terms of the fall, yeah. And if you really understand from a very macro, and even I have not had time to kind of go through details in terms of the ramifications of this, it seems to be overdone, if you really ask me. You know why? Because this is not, logically doesn't seem very tenable, and the legal course could probably defer things, if not take them out of the picture completely. So if that deferment is of any help, the market will sense that opportunity and respond positively to it. So from that perspective, it could kind of bounce back. But these are days or events where you really don't want to kind of do bottom fishing on the hope that things will improve. So it's best to let the price settle, let all the concerns get addressed, and then kind of look at it. But at lower levels, at 210, 11, it definitely makes for a lot of value buy in that sense, because the run rate is much more positive if this impact gets diluted. So you kind of look at this as an opportunity.
Prakash, would you buy the dip on VA Tech Babak today?
Yeah, I personally have been very positive on this space. It's just valuations that have been concerning, and these kind of opportunities again give you that thing. So this is like the Maggie moment in some of these stocks where it could have an impact which is short term, not long lasting or permanent, and then you move on. So from that, yes, but there are lots of opportunities available in that space. A lot of the new listed names are looking quite bright as well. But yeah, VA Tech Babak, if you're convinced of the business model, the annuity kind of a thing, transition that they're making at 1600 or whatever, 1680, it does make sense to take some exposure at least, instead of, worrying about the high valuation that you had earlier.
I like it, how you called it Maggie moment. I think we
No, I think that's because, Prashant, that was the first time where that impact happened, and it was so significant for a large company like Nestle, and things changed after that. You see how dramatically it moved. So just came to my mind.
No, it's very, very well put. I think we can use it more often, Maggie moment, to describe these situations without having to go, and make all the effort of explaining. I think that captures it. Or if you ask Ramdevji, maybe he'll call them bruised blue chips. That's his latest wealth creation study. By the way, Prakash, as we sort of head into 25, anything interesting in single stocks that has caught your attention? You're the one for bottom-up investing, and in some of the newer sectors is where all the buzz and action has been. The bigger, slower-moving giant sectors are just that. And maybe there are ideas there as well, but you are one for small and mid caps.
No, so certainly, I mean, I told you last time that I carried out a study of names that IPO'd in the last 12 months and which haven't been kind of, doing, enormously well post the listing, and there's still a lot of. So one of the names that stands out in that is a company called Indegene. I think I must have spoken about it in the past as well. But Indegene is a very specialized company that focuses on giving digital support, research inputs, in a very systematic, structured way to a lot of the large pharma companies. And remember, what's happening is the global market for pharma is rapidly evolving into a winner-takes-it-all kind of a thing. So if you actually get some of the processes right, and everybody's been talking about the CDMO opportunity that we are sitting on, which is true. But what molecules to back, what kind of money you would need to, budgets you would need to allocate, prioritize, those are things that a lot of companies miss out on. Indegene pools all that collective knowledge to bring that out and make sure that the efficiencies are up there. It's a very lean balance sheet. There's absolutely no need for too much of money to be put into this business. It's more intellectual property driven. So I think if you understand that business, if pharma were to grow, CDMO were to grow, we were to globalize, there's no reason why this company won't get the right kind of. It's worth studying further, and very good management as well, as I could sense from my interactions with them. So it's right up there, unique in its own way. And not yet very long history, as I said earlier. So that's where a lot of money could be allocated to it in the years to come.
Vishal Mega Mart, it's had a bumper day one. The market cap has already crossed 50,000 crore rupees. With the kind of up move we've seen, the valuations is 75 times forward multiple. What happens to the stock from here on?
I hope, Rima, it doesn't disappoint people who have placed their conviction into this. From a retail perspective, if I remember correctly, it was just under 3 times that it got oversubscribed, whereas it was more largely the institutional money that was kind of chasing it. And from the overall perspective, it seems like, I remember, funnily, Mangalam was describing it, saying it got oversubscribed only 27 times. So it was like only 27 has become like a letdown in terms of, what's happening to other businesses. But I think it is a bit overdone. These are businesses that take much longer to make money. The return on equity is not as comfortable as you would think. The margins are, always under pressure. And look at what some of the more established names are also struggling. So it's just that the geography and price point segments that Vishal Mega Mart is into is decent enough for them to get this kind of a thing, attractiveness. But I would not buy it at this level. So what happens to the stock? I hope it stays where it is or moves up. But otherwise, it's going to be a very uphill task to create value out of this at this level.
Okay, all right. Prakash, I wanted to ask you about these CGD companies, the gas distribution companies. They saw a sharp reaction because some negative news flow came in there with regard to availability of their raw material, with regard to the pricing of their raw material moving up as well. And the amount that they could pass on was rather limited. But from the recent lows, actually, these stocks have bounced back strong. IGL currently at the high point of the day. Your view on the stock?
So, Nigel, I remember when one of the morning shows when this news had come on the overnight and we were talking about the impact, and I'd said any opportunity in the gas value chain on the back of bad news flow is an opportunity to add these stocks into your portfolio. Let me tell you, in the next 1 year, the way the LPG market, the LNG market, rather is going to explode in terms of supply, availability, and all that. Anybody who can put that to use in an effective way, cost-efficient way, is going to actually be laughing the way to the banks. Now, whether it's Gas Authority of India, whether it's the CGD guys, whether it's equipment manufacturers who supply to CGD, which goes right from pipes and compressors and everything. You remember we spoke about Wellcop being such a promising buy because of what's happening in the US. A similar thing is going to be replicated in the Indian market as well in terms of explosive growth. So I'm very positive on it. I would believe some of the franchises like Petronet LNG, even IGL for that, or Gujarat Gas. Gujarat Gas is definitely an asset which wouldn't let you down given where they are, and they'll probably be able to leverage on this growth very, very effectively.
Prakash, thank you very much for joining in. We have a story coming in from CNBC Awaaz. Now, Lakshman joins in with an update from the oil marketing companies. Lakshman.
हाँ, बेसिकली यहाँ पे दो न्यूज़ है, वो ऑयल मार्केटिंग कंपनी और शुगर कंपनियों के लिए इम्पोर्टेंट है। पहला तो ये कि शुगर कंपनियों से ऑयल मार्केटिंग कंपनियां जो एथनॉल परचेज करती हैं, उसका जो टेंडर डॉक्यूमेंट इशू किया गया है, उसमें सबसे इम्पोर्टेंट चेंज ये किया गया है कि अब ऑयल मार्केटिंग कंपनियां पहला प्रेफरेंस कोऑपरेटिव शुगर मिलों को देंगी। ये जो प्राइवेट शुगर मिल है उनके लिए थोड़ा सा निगेटिव है, क्योंकि पहले क्या होता था कि जिन प्राइवेट शुगर मिल के साथ लॉन्ग टर्म कॉन्ट्रैक्ट होता था, सप्लाई कॉन्ट्रैक्ट, उनको प्रेफरेंस दिया जाता था एथनॉल खरीदने में। अब वो प्रेफरेंस की कंडीशन को हटा दिया गया है, उसकी जगह नया कंडीशन जोड़ा गया है, कोऑपरेटिव शुगर मिल को हम प्रेफरेंस देंगे। और ये 88 करोड़ लीटर का टेंडर जारी किया गया एथनॉल के लिए। इसमें इंडियन ऑयल कॉर्पोरेशन, बीपीसीएल, एचपीसीएल, एमआरपीएल, ये 4 कंपनियों ने टेंडर जारी किया है। तो एथनॉल अपना बेचने का जो एक स्कोप होता था वो प्राइवेट शुगर कंपनियों के लिए थोड़ा सा लिमिटेड हो जाएगा इस कंडीशन की वजह से। दूसरी जो एक बड़ी खबर निकल कर आ रही है वो ये है कि एथनॉल की प्राइसेस बढ़ाने की डिमांड कर रहे थे चीनी कंपनियां। तो शुरू में इन लोगों की डिमांड ये थी कि 2 रुपए से लेकर 2.5 रुपए लीटर प्रति लीटर एथनॉल की प्राइसेस बढ़ाई जाए। प्राइसेस बढ़ाने का मतलब कि उस बढ़ी हुई कीमत पर ऑयल मार्केटिंग कंपनियां इनसे एथनॉल खरीदेंगी। अब जो मुझे सोर्सेज से जानकारी मिल रही है उसके मुताबिक 2 से 2.5 रुपए लीटर शायद ना बढ़े, इससे कम बढ़े, मुश्किल से 1 से 1.5 रुपए लीटर प्रति लीटर बढ़े एथनॉल की प्राइसेस। और एथनॉल चीनी कंपनियों की इस मांग को कि 2 से 2.5 बढ़े, इसको शायद सरकार में सहमति नहीं बन रही। तो 2 ऐसी खबरें हैं जो शायद चीनी कंपनियां, प्राइवेट चीनी कंपनियां, उनके लिए अच्छी नहीं है।
Okay, all right. Thank you, Lakshman ji, हमारे साथ जुड़ने के लिए, and to sort of give our viewers that sort of information, and we'll actually speak with companies and try and better understand what this would mean, but that's in a bit from now. We'll take a quick commercial break here. I think market's still down. Sensex is down about 500 points or so. We've got a very interesting conversation lined up on the other side, and that's coming up in just a bit from now.
Okay, and here's also some good news for all you viewers. India's business news leader is now just a click away. So introducing CNBC TV18's all-new app, you can get instant access to breaking news, in-depth articles, financial world updates, all on your fingertips. So download the app now from the Google Play Store or the Apple Store.
Well, 150 points down, 24,188 is where we are now trading at this point in time. Okay, that's the camera. Well, our next conversation is a very interesting one. The big listing of the day, of course, is Vishal Mega Mart. We were joking earlier that it's a Vishal guy listing in that sense, right? Interest in the name was huge, and the stock is up some 40% as we speak. We have with us two early investors in Vishal Mega Mart. Manas Tandon is partner, head of a private equity group, Goods and Products Partners Group. Nishant Sharma is founder and managing partner at Kedara Capital. Both are with us here in our studios. Gentlemen, Manas and Nishant, thank you very much for being here. For our viewers, let me start. Let me do a bit of shock and awe, as they call it. For both of them, the Vishal Mega Mart deal is a total of realized and unrealized capital gains, I mean, combined of $5 billion US. Am I correct? Between the both of you?
In the ballpark.
In the ballpark.
Thank you.
And for you, it's about $3 billion
yes,
total?
Slightly over 3, right? Yes.
And $1.6 odd billion. So yeah. I think this is also one of the largest sort of capital gain events on listing from a private equity space perspective. So let's just start there, and I want to start with you, Manas. We see the glory, but there's a lot which sort of happened behind, and today is payday.
Yeah.
But you guys have stuck with this investment since 2018.
Yeah.
For our viewers, right, they're investors and they're smaller investors, and what are some of the lessons one can sort of learn from the Vishal story, and really what's to take away?
Sure. So actually, let me first start by saying something. Yes, you say it's the payday. We've just sold 23% of our stake. We've taken on hundreds of thousands of new partners in this journey. And so for us, it's just the beginning of the rest of the journey, right? Because obviously there's a lot of trust that has been reposed in us as a part of just the last few months when we've been able to tell our story. And so the journey is just getting started, right? And in terms of the lessons learned, ultimately it boils down to having a super end market, a market that you really believe in, and where you're able to add real value. And if you think about it, and Nishant said this earlier today at NSE, ultimately our customers are not the super privileged customers, right? So giving them a high quality product at the most reasonable price, with respect, with you know, just the kind of customer care that we sometimes take for granted is super important. And frankly, that's the big obligation of Vishal and our 17,000 colleagues on the ground. I would say the second is sometimes you realize through adversity what kind of a magical team you're surrounded by, right? So if I look at GK and the whole Vishal team, right? I mean, we went through a year and a half of a very tough COVID period, right? It was really, really tough, right? And we could even in that period, the team said, we are gonna do whatever we can to make sure essential goods flow through to our customers, right? And so all of that those are all lessons, you know, because you see the team really come together, right? And that's when you see the magic happen.
Nishant, for all the new shareholders who've now onboarded Vishal Mega Mart, as a promoter, what are you going to tell them? Because people always have this fear that PE investors, they have a shelf life. I mean, they have a fund life. And therefore, there is bound to be supply coming in every few years, right? So how do you feel about consumption in India, and particularly staying on in Vishal Mega Mart?
No, I think it's an important question. I think we're obviously people who've been around for 12 years as a firm, and I think the reputation that we've built as a firm is to really be patient and very long-term, investors. So I think for us, I mean, if you look at our track record of having invested in other businesses, we've held businesses for as long as 10 years and still holding, right? We're ultimately believers in long-term secular growth and compounding. Vishal is a perfect example of compounding. From the time we invested 200 odd stores to now 650 plus stores, FY24 was at about 8,900 crores in revenue. And we believe there's a lot of opportunity. The one thing which Manas mentioned was a large TAM, a great management team, but also a great box model, right? The box model is relevant for Bharat.
What's a box model?
The retail box that Vishal has, which is essentially the store. It has assortment of apparel, which makes aspirations affordable. It's, you know, a lot of people can't afford Zara, right? But you want to wear a skinny jeans, you know, where can you get a skinny jeans at 1/5 the price with the same styling? It's at Vishal, right? Similarly, on general merchandise, on FMCG, you're giving compelling value to people who have limited budgets and are fighting inflation. So to be able to dream, you know, on the same Instagram handle and wear pretty much the same thing is you know, really, really important and big.
So you're committed to the long term, for
Absolutely.
the long term.
Very
10
much
years
so.
plus from here on?
I think time obviously is we'll see how it plays out. But from our standpoint, I think we're here for the long term. You know, as we have, it's already been 6 years, right? 2018, as Prashant mentioned earlier. So we will do what it takes, you know, from our standpoint, as we've done in the past, to make sure the business continues to be run professionally as it is today, with a professionally managed, you know, board. That we'll continue to ensure.
And I think that's also, in some ways, Nishant and I talk about this all the time. It's a little bit of a obligation of people like us in the private equity community in India to leave behind businesses which are truly board governed, professionally run. It's a real opportunity and something that, frankly, needs to happen more and more in our country.
Okay, and so that's the Vishal story, and it's incredible that you know, this is at the lower end of the consumption, right? I mean, since COVID, the sugar rush which happened, and we were all talking about premium this, premium that, and here is a company which is actually, as Nishant pointed out, at the bottom end in terms of.
You know, I asked Guninder Kapoor, the CEO, the average price of apparel is just 200 rupees at Vishal Mega Mart.
And the opening price point is 99 rupees.
Opening price point, but the
So it's a
average,
polo
he
t-shirt,
said,
yeah, average is about
200 rupees.
Is it
It's
true?
lower in summer and spring and a little higher in
Is
winter.
it true? Someone said that the price has not changed. The T-shirt still
It
is
hasn't,
99
because we
rupees for the
can't
last.
pass on inflation to our consumer, right? That's the reason why we are able to have such a loyal customer base, because you want to make sure that you're delivering value to your consumers every day. If you're going to pass things on, as most brands end up doing, then in some ways it's not a partnership, right? It's just a one-way street, and you're using brand power to pass pricing on to consumers.
So let's look ahead, right, in terms of consumption and not consumption, but ideas, themes that our viewers can benefit from. Everything in India, in a way, is underpenetrated, right? I mean, infrastructure is getting built out, consumption, financial services. I mean, those are the big in that sense, talking points. But there are so many newer niche segments which have emerged and on the radar of investors, both private and public. So, Manas, why don't you take us through 2-3 themes which you think have got long runways, and these are areas where people should look for ideas to invest in. And if you want to take specific examples from your own experience, please feel free.
Yeah, I mean, for us, financial inclusion continues to be a very big theme, right? And every year we keep talking about, and frankly, that's probably been the largest value driver for people like us in India, right? Because there is so much to do on the ground. We were fortunate enough to do an affordable housing finance business called Aavas together. I mean, Nishant and I go back 20 years, so we've a lot of history and we've been fortunate to work together. And if you look at the Aavas journey, right, $10,000, $15,000 loans, right? Our typical loan size is 9.5, 10 lakh rupees. And those people are so grateful that somebody is able to recognize their unique business model and financial situation and be able to respectfully deal with them and give them those loans, right? And I genuinely feel like there is such underpenetration, financial inclusion. So I would say that's truly continues to be an area of interest for us. On the other end of the spectrum, if you look at increasing prosperity in India, right? And it's not just about the top of the pyramid, but the middle of the pyramid often tends to not have enough ideas on what to do with whatever savings they have, right? So we've also found interesting companies doing space in the middle of the pyramid where there are real savings and people are trying to figure out कि आगे जाके क्या करना है, right? And what should we do with this to secure our family's futures? I'll let Nishant add on a few things, but those are 2 or 3 areas where we feel very excited.
What kind of business is there in that?
So I would say like wealth management for the masses, and I hate to say the term wealth management because it's not really wealth, right? But it's really sort of savings management in the middle of the pyramid, right? Because those are the people who are now saying our kids are growing up, like there is enough to save. How can we provide some of that prosperity to our, or leave, do something interesting with that?
First of all, congratulations, gentlemen. And where's the party?
Nigel
came from one and we're going to another.
But you'll be surprised, the whole management team's flying back because they said now it's time to get back to work.
And kudos to you all because, when GK was here in the studio,
Yeah.
I was just doing some research, was going through the prospectus that you all put out as well. You all would have invested at a time where you all were getting cases about salaries not being paid and, the company was in trouble and various allegations as well. So kudos to you all, back to yourself, and in fact, it's made all the big money. But let's get to the way forward since you're going to be getting back to work. And Nishant, let me come across to you first, actually, because you all have raised quite a lot of money, right? You had a couple of investments that you all have exited, I think, in the recent past.
Yeah.
Where do you put all that money now? What's the top bet?
Sure. I think a few areas, what Manas alluded to, financial inclusion, financialization of savings, which is wealth management, asset management. I would say health and wellness is an area which we find very attractive. We've invested in a nutraceuticals business, around just before COVID actually. So it was, I would say, luck more than, any timing or anything which we knew before. But that is one area. We're looking at organized healthcare services. So we have
name the company.
Universal Nutriscience.
Okay.
So it was a portfolio of brands from Sanofi which we acquired, and again put together a management team. And they've scaled the business already. From the time we invested, it's doubled.
Okay.
Then we have a fertility business, which is again the third largest fertility chain in India, based out of Hyderabad. One of the largest dermatology chains called Oliva. One of the largest eye hospitals called ASG. And these are all essentially, a lot of unorganized healthcare services, especially post-COVID, moving to organized, right? So that's one theme which we continue to be very excited about. The other piece, which is, I think, very exciting, is digitization across, a variety of sectors. So financial services being one. We invested in a business called Perfios, which has this product called Bank Statement Analyzer. It's literally the backbone of every bank and NBFC. They have 80-90% share in their core product, and using that to build new products, which eventually helps banks underwrite better, collect better, manage their liabilities better, and so on. Similarly, on payments, again, looking at some opportunities in payments, which could be very interesting.
So not lending companies per se, but companies which are working with lenders in that sense.
So lenders, we've done,
of course,
like
you've done
Manas, we've done Avas, we've done AU, we've done Spandana, we've done Veritas.
You're out of all these?
No, some we're out of, some we're still in.
Okay.
But we've picked literally a specialist in each domain and backed them. And then lending obviously continues to be a theme, but beyond lending, obviously financial services is a large profit pool. So looking at asset management, wealth management, payments, the banking tech in some ways, which is, again, a big area. There's disruptions happening there. SaaS businesses, omnichannel retail, again, in certain categories. So lots and lots of exciting stuff. I think it's hard for us, when you ask us on themes, it feels like a kid in a candy shop to some extent, because we really think there are lots and lots of interesting opportunities.
What are the investments you'll have from the listed space as of now? If you could
so we have Avas.
But you'll already have got into a deal with that, right?
Yeah, so but we still own it until it gets,
yes,
so right now. So Avas is there, Vishal's there, Spandana is there. We had Vijaya, which we exited. We had AU, which again we exited. I think those are on the unlisted side, where we again just did strategic sales. We sold Manjushri, we sold Billforge, we sold Parkinson's. All of those were strategic sales to either a sponsor or...
You said a kid in a candy shop. Has the candy gotten expensive? I mean, because I think so many public market investors that we speak with, they're all in a way backward integrating, because by the time things hit the market, it's already so expensive. So they're all trying to find... The public market investors are becoming venture investors and private equity investors and things like that. So where are valuations broadly? That's the question. Are they at the top end? Is this a good time to look? If you're already in, that's great and you're riding the boom. But what about now, here and now?
Prashant, I've been doing this for 18 years.
Yeah.
It's always been expensive. It always feels expensive, right? I think the trick for at least the way we think about it at Partners Group is it's about who's willing to really roll up their sleeves and do the hard work, right? Because I don't think, frankly, even 10, 15 years ago, I think the days when you could just write a check and watch the business compound have been long gone for a long time now, right? So it's really about finding, we talk about themes, it's ultimately about finding that one business, that one great, amazing management team, that great, amazing market opportunity, and then working very hard on it to try and, make it even better.
I couldn't agree more. I think it's been always super expensive. What has happened though, the industry has matured a bit like how it's sort of matured in the West. you've figured out your circle of competence and you're not trying to sort of, get too enamored by fear of missing out, FOMO as we call it, because that's classical, fallacy amongst most investors. You say, look, this is what we know really well. This is what we understand. So even if we end up paying up, we have the ability to extract value in some form or shape because of how well we understand a given space. So that's what's happened. I think people are picking their spots. We may not like QSRs as much or restaurants and fine dining as much because we believe the risk reward is different. Someone else may have a different point of view, right? So it's just about picking those spots.
I'll tell you where we're coming from, because this year, in all the IPOs that we've seen, there have been so many promoters, either PE or non-PEs, who've cashed out, which makes, shareholders, retail shareholders think that do the promoters know something that we don't? Do they think the valuations of their own company are on the higher side, which is why this year, compared to all the prior years, we've seen more of promoters offloading via offer for sales in IPOs. So that's where we're coming from.
They know more, but you would not agree with the conclusion, right? Obviously, you've been with the journey for so long, but it's go on, please.
Yeah, but I think, Prashant, the thing is, and we had this discussion even on this particular situation, right? Yeah. Here's a business where, like Nishant was alluding to the box economics, right? Here's a business where in the last 6 years, except for, a little bit of help when COVID was really at its peak, right? This is a business that's been fully funded by internal accruals, right? With the growth that all of you have seen, right? So at some point you say, should I be raising primary capital just to allay this concern, right? Because ultimately you want a capital efficient business. You want a business to perform at the peak of its ability, right? And frankly, the last thing, we are not one-time business owners, right? Ours is a repeat business. We will hopefully bring many things to the market, right? And the most important thing for us in general is credibility, right?
Everyone makes money along the way. I mean, that's
absolutely.
It's an obligation on us.
Yeah, absolutely. Yeah. I think we've sold only a fraction of what we own, right? Yeah. At some level, and I think whoever has come into the IPO has obviously benefited, and it's our responsibility to make sure that the business continues to compound as it has in the past.
Nishant and Manas, thank you very much for dropping by. Very special chat, and we loved it. Thank you very much. And enjoy the party and the after party and the after party.
Have a good one, guys. Have a good one.
See you guys. Thank you very much.
See you guys.
Nigel, there is some news on the steel sector. Maybe right up your alley. I'm not sure this is significant. Steel industry submitted a I think this is a proposal which has come through. DGTR to you. DGR, okay, this is a clarification. They're yet to make a recommendation to the Finance Ministry, and they will soon seek responses and then make a recommendation to the Finance Minister. So that's what's coming through. No real.
So now all the, the requests have been made. Now we have to see action. Yeah. So that's why I think we wait for action, right? So they're looking into it. Mr. Sajjan Jindal, Mr. Naveen Jindal, you have the Steel Ministry. Everyone says we want protection. The Chinese are, producing a lot. They're not consuming enough. They're exporting to various parts of the world. So we want some protection from those imports. But the smaller guys are saying, hey, our cost of production is going to go up. So we are not in that camp. So we'll have to see which way this goes. But it's a recommendation that's been made. Parikshit has got the latest of that. So he'll join in to give us this factual update in terms of what's going on.
Absolutely. And stocks are not reacting. I think this is, and precisely for that reason, because this is
now they want to see action.
Recommendations which are going through. All right, well, time for our special segment, D Street Chatter. Nimesh is going to join us with some dealing room chatter, what he's picking up. Nimesh, interesting chat earlier there, slightly longer term, but here and now, what are you picking up?
Hi, Prashant, so for second day running, the markets are under pressure, and the large pocket which is dragging the market down are the financial stocks. Across financials, you're seeing selling pressure. And I guess it's largely to do with the management commentaries, which you are hearing from a lot of the brokerage notes, right? That most of them seems to be sounding either negative or very cautious. So I think that's the reason why you're seeing the entire financial basket under pressure today. From a flow perspective, we saw a big sell number yesterday. It looks like it won't be that large. But again, the buy-sell ratio seems to be more on the sell side, even in today's market. I guess the big focus is shifting towards the new listings. Look at the volumes in all the 3 listings today, and all the stocks are up between 50 to 90%. So kind of massive move we've seen in the new listings today, and looks like that's going to be the trend, at least in the near term. So that's where the whole focus seems to be, even from a flow perspective. From a sector standpoint, I guess pharma has stood out today, and I've seen some bit of buying interest as well. Selective news based on some pharma names, but largely that basket has done well today. But broadly, the feedback is, the selling pressure seems to be not that large today. But also watch out for the PCR. It looks little oversold now, and generally we've seen around 0.6, 0.56, 0.6 levels. Market tends to have a pullback. So I guess that's what to watch out for. But I guess the whole action seems to be in broader markets and in the new listings in the last couple of days.
Okay, so let's get to the stock buzz that you've picked up, Nimesh. What do you have for us?
Well, in terms of individual names, the first stock is Lloyd Metals. Again, the stock is at 52-week high, been buzzing in the last many days. Even today, the stock is up 2%. I guess tomorrow there is an analyst meet and investor meet, so that's something to watch out for. Some announcements are likely there. And in terms of flows, I understand a domestic mutual fund and a couple of domestic PMS have been active buyers in the last couple of days in Lloyd Metals. So that's the first name. The second stock is 361, erstwhile IFL Wealth. The stock is again at 52-week high, been buzzing in the last many weeks now. For 361, apart from buying flows, the feedback is there could be some corporate development in 361 to watch out for. So that's the buzz there. The third stock is Ipca Labs. The stock is under pressure today, largely on back of a large block. Nearly 2% equity got changed hands. It was a block worth almost 800 crores. The deal happened at almost 60 rupees lower. But the stock has recovered from there, but still it's been under pressure today on the back of that large block deal. So disclosures could be quite interesting in Ipca Labs. And the last is Star Healthcare. Again, stock almost at 52-week lows, hasn't done much in the last many months now. But at these levels, the sense I'm picking up is that a very large influential investor has started buying Star Health at these levels. So again, something to watch out for from a flow perspective.
All right, there's already one very big influential investor in Star Health, right? There is RJ, Rakesh Junwala, and the sort of firm there, Rare, which I think still is a large investor in Star. Another one coming in as well, as Nimesh tells us. But interesting list as always. Steel stocks is what we were talking about. They're seeing some recovery. Sources say that the DGTR is going to initiate action on steel industry request seeking 25% safeguard duty. Parikshit is here with details. Parikshit, afternoon.
Well, this has been under discussion for a very long time. There have been a lot of representations from the steel industry to protect them from Chinese steel, and they have requested for a 25% safeguard duty. Now, what we've been told by our sources in the government, that the industry has submitted a letter to the Directorate General of Trade Remedies. And how this works is this, that the DGTR will have to take responses, give notices to all stakeholders involved, take a decision and make a recommendation to the Finance Ministry. The Finance Ministry will finally take a call on imposing the safeguard duty of 25%. So the process has been initiated. There is a letter to the DGTR has already gone. They will now seek responses, but any final decision is still awaited. The government has been examining this, but a decision is still awaited on this matter. The industry, of course, very hopeful that this 25% duty will be implemented, but as far as things are concerned, as of now, it is still work in progress.
Thank you, Parikshit, for that update. Get into a break. We'll come back with a few BTST calls from our technical experts.
Well, a little bit of buying ahead of the big event that we'll hear later tonight with regard to the Fed. BEL has come off the low point of the day. ICICI Bank is fighting back as well. So some kind of cutting of losses is what we're seeing. The Nifty Bank from being down 800 points is now down 600 points or thereabouts. Mitesh Thakur is back with us. Mitesh, what do you do? The Fed should have some good news, hopefully with a cut, and hopefully they don't sound too hawkish. But trade on the index as well as a couple of fresh trading calls on stocks.
So, Nigel, on the index, we maintained our put spreads. On the stock side, STBT on Tata Motors with a stop at 763, 764, and for 740 as the target area. While IT names still look better to me, so we'll pick one of the IT names, and that's Tech Mahindra, which is a BTST with a stop at 1764 for targets of 1800.
Got that. Get into a short break on that note. By the way, the mid-cap index is down more than the frontliners now, down close to about 400 points on the mid-cap index. Get into a break. We'll come back with more market talk. Counting down to the close, it's a disappointing session. Markets down for the third day in a row, and the Nifty is ending around 24,200, a cut of 120 points. The only good part, perhaps, is that we've not breached that Friday's low of 24,180 convincingly. We're managing to close above it. Banks took the biggest knock in trade. The Nifty banking index was down close to about 1.2%. Other sectoral indices where there was pressure, PSUs, the Nifty PSC index down more than 2%. Metals declining for the fourth consecutive day, and today down nearly 1.3%. We spoke about banks, and you had softness coming through in the auto pack. So the Nifty auto index was down nearly 0.7%. Tata Motors was the biggest drag today in the frontline indices. Tata Motors down nearly 3%. But even other than that, you had cuts coming through on a couple of these two-wheeler names. In terms of the large cap banking action, you had ICICI Bank, Axis Bank and HDFC Bank. All three of them selling off close to about 1.5%. Power Grid, BEL, JSW Steel almost down close to about 2%. On the way up, trend, top gainer, pharma names saw buying. Dr. Reddy's Cipla, Wipro looks smart today. Reliance Industries provided support. Tata Consumer, TCS, Tech Mahindra, ITC with some of the other notable gainers.
Well, that's right, Rima. In fact, some of the stocks that moved big time in today's trading session on fairly large volumes. If I look at some of those names that should come up for you on the screen today, you had Enviro Infra, the one that's recently listed. Well, that one came in for profit taking. Remember, the listed, I think the IPO price was 160 rupees odd. It's moved one way. Today, the law of gravity seems to have got caught up. So that's why, in fact, that stock did end lower in trade. You had Federal Bank that was lower. Sambadana Madison, actually, the stock was moving quite well today. That as well came in for some profit taking. And NTPC Green has corrected more than 10% from its recent peak. IPO price at 105, went up on limited float. Well, that's come back down again. Some news at the bottom of your screen. Appears there's a favorable verdict that's come in for VIP. So that's another stock towards the end of trade that ended higher. We'll wrap up this edition of Closing Bell. You don't go anywhere though. We have Markets Forward that comes up next.